Trader Trading Market Technicals morning call video for Monday, October the 7th. Markets did get a relief rally. Dow Jones up 76, Nasdaq up 33.5, S&P up 11, and the Russell up 7. Holding up quite well, the Russell, during this intermediate downtrend that we've been having for the last 11 days. But really holding up well as the Nasdaq. So the two leaders are leading, and of course the transport's doing its own thing as well. But the Dow Jones and the S&P have really been getting clobbered of late. We are now in the early morning session here. It's about 4:30ish Eastern time, and I just wanted to put up here a live shot of the E-minis. We are down 17.5 to 18 handles. That's a big move lower in the overnight in the European, the Asia and the European session. So we have now lost everything on Friday and then some. Our target area right now is 1663 and then 1558. And if we can't sustain this level here, I think all bets are off. And again, it's with the nonsense what's going on in about the debt ceiling and in Washington. So again, another weekend of no resolution. Markets are selling off, and we don't like uncertainty. Obviously, the markets do not like uncertainty, and that's exactly what's happening and what you're getting. So, how do you play this market? So, well, you got to be a little bit more cautious. I think that the overall trend still remains up. There's no question about it. I'll show that to you in the weekly and monthly chart. However, we are still a little bit extended. In the short term, we are oversold, so I do think we're due for a big oversold bounce. I'm not talking about one day. I think I'm looking at more of several days up, and then I think we do fail, and I do think we do fail miserably before the end of the month is over. And I've been stating that end of August, early September, that we are looking for some seasonal weakness. Seasonal weakness really ends at the end of October, the third to fourth week of October. So keep that in mind, okay? Now, how do you play it? Well, if you're a longer-term investor or a swing trader, you know, I still wouldn't be nibbling in here long, but if you're looking for a swing trade, you obviously want to buy strong stocks and you want to be shorting weak stocks. To me, I think the risk reward being short, being down so many days without really a logical bounce is 50-50. The odds is not that great, at least for me in my trading plan. So I like to back off a little bit, see where we're going, start looking and building a list of stocks when the market does bounce. And again, I do think we're going to get a sizable bounce, at least a good dead cat bounce here when the debt ceiling does get resolved. Obviously, money will be flowing back into the markets, and then you really need to see where we go from here. We could actually continue to roll over into November like we did a couple of years ago, and we had a really late start of that Santa Claus rally. Doesn't even mean that it has to happen. So just, keep that in mind, okay? But if you're looking, we have earnings starting today. Alcoa kicks it off today. So we're going to be very, very active with a lot of trade ideas, and that's why just keep the pallets dry. Plenty of time to make a lot of money here, especially in October, where we have volatility picking up. So we're down now 17.5 handles. I wanted to show that to you. So really, really use a lot of caution. And please always use your stops. So we'll see what happens. So when this debt ceiling gets resolved, and at least they've at least kicked the can down the road for another year. Let's see how this market reacts. But I do think if the markets rallies at least one more time for a few days, not just one day, I think that will get sold into for the longs that are actually trapped way up high from a couple of weeks ago when we made that all-time high with Ben Bernanke on Wednesday when the FOMC came out. Okay, so let's get into, I want to show you some of the indicators as we do on Monday. Let's go through all the bullish percent. This is still on a sell signal, trying to curl up here, but it's going to take a lot to do so. And with the markets down 18 handles in the pre-market, I don't think that's going to happen today. Now, we could literally, guys, I've seen it before. We could open really low or flush lower, and that marks the low of the day. So that's what I'm going to be looking for a trade today. If the markets can sell off and then push even lower than where we are now, and then create a lot of volume and get that reversal candle that I'm looking for, then I would obviously take a long play. I would not be looking to short here at the opening. You're down big, and don't forget we have been down for quite a while. Okay, so but the bullish percent still on a sell signal. Okay, let's take a look at the XLF bullish percent XLF. That is on a buy signal ever so slightly, but we do have a bearish pattern here that actually triggered. So let's take a look at the XLF. I'll show you that again, and then Goldman in the chart segment. But again, Goldman does not look good at all. If Goldman starts to really sell off hard here, then the XLF will probably follow suit, as well as the market. So XLF not looking too good. USO, no trade here. We're flatlined in the bullish percent. Did call a trade here where we popped up higher, which was a great little overnight swing. But right now, we need to either get back in this area a little bit lower, maybe 80, 90 cents lower, and chop around this area. But with the volatility here picking up, oil could really dump and could dump hard, and that would be this area here, which was that symmetrical triangle that we showed you many months back in the summer. But this here, if again get back into this area here, I'd consider another long trade. I wouldn't look to short it as well. I like to play oil a little bit more on the long side because of a lot of stuff that's going on in the Middle East. But right now, obviously things have subsided, but that doesn't mean things can't pick up again. But look at oil here down in this area, or back to this line and see where if we can consolidate a little bit lower and then make a move higher out of the base. Okay, now let's take a look at the stocks above the 50-day moving average. We are still lower, trying to break above the 8, but again, really no strength at all. But we're kind of holding in here in this 50 percentile, so not that bad. I'd like to see a little bit of a dip lower. See, now if we had a lot of these indicators really at extreme levels, then I'd say we were in the mood for a big bounce. But that's really not the case, and that's why we can move lower. It's quite easy here. If you can see, look at the NYMO. The NYMO here is really at -7, -25, up 18 yesterday. Even then, I like to see the McClellan oscillator way down in this area with the bullish percent, the stocks above the 50 and above the 200, much lower, reading around 30%, and the stocks above the 50. That's a good sign that we may bounce. But right now, there's plenty of room to move to the downside. All right, let's take a look at the Nasdaq Summation Index. This is still on a buy signal. This is like turning a truck. It takes a long time for it to hold in, but we are still on a buy signal. Last week we had a down week, but again, nonetheless, still on a buy signal. Take a look at the New York Stock Exchange Summation Index as well, still on a buy signal. So, a little bit of mixed signals here, but again, we could move higher and we could move lower. So, really not telling you much here. I think that being oversold that we are in the short term, have to be really careful. You have a lot of headline risk out there, guys. Any moment, the Yahoos down in Washington could say that we've resolved the debt ceiling, and this market will rip. Now, it could be short-lived, but it will rip. And if you're short a bunch of stocks, you're going to get hurt. So just, again, keep the pallets dry. S&P monthly chart. We have an uptrend channel here. So everything is fine. We're above this area here, which is support. However, we do have a bearish pattern that I can point out here, which is a bearish rising wedge. Only bearish when we break the lower trend line. And don't forget, this is a monthly chart, so it does take a long time for it to do so. All right, and then we have support right underneath it. So this is something that I'm really not too worried about at the moment. The longer-term picture still looks very, very good, at least for the short term. Here is the bearish rising wedge on a weekly chart, also in an uptrend channel. So again, still looking pretty good. We didn't get quite to the bottom of it, but we bounced off it. Let's see what happens this week. We did have good volume the following week, at least better volume than we did the previous week. And again, still reading slightly overbought on a weekly chart, but again, this is still looking okay. If we start to break down in these higher time frames, that's going to really get me concerned. All right, here is the spiders, and last week, if you remember, I did a Fibonacci retracement from low to high, and I got two fib clusters right here at 66.60 and 62.80 logical areas, and then, of course, the 200. So these are going to be your target areas here for downsides. If we do lose Thursday's low on a closing basis, more than likely, you're probably going to look for this fib cluster area at 162.80, which would be the August 26, 27, 28 lows, and then, of course, the June 24th low down here. Now, if that happens, then I think we're going to have a deeper downside correction if we actually get down to this level. Here is the 30-minute spiders, and again, if you look at it, we're all we're doing is we popped up and just grinding lower. Again, bulls still in control if you look at it. Really, there's no fear of selling. Now, this morning, we actually, market sold off because there was no resolution over the weekend. And then we had some cuts and some forecast in Asia, so that added a little fuel to the fire. But again, guys, keep an eye on this market because it is a little scary here. Fib cluster in the diamonds, which is the Dow Jones, we're on it now. If we lose Thursday's low, I would look for a test of this area here, which is probably going to coincide with the 200-day moving average. So I'm not looking too good. The Dow Jones and the S&P are definitely the two weakest indexes. Here's the IWMs, one of the strongest, one of our leaders, holding up well. And again, if we lose the three leaders that are kind of holding up this market, then I definitely think all bets are off to the upside, at least for a while. Because if we lose this, then I think you're going to have a deeper downside correction. Transports as well, holding up okay. Where it was just sitting at the 20-day, above the 50, above the 200. So we still have some bullish symmetry on these moving averages. But again, guys, just keep an eye on this market. If we do flush, we need to see how these leaders are going to handle it. And Goldman Sachs, again, not looking too good. As you can see here, can't really muster a rally. We did have this little bit of a bullish falling wedge here, if you want to call it that, and we couldn't even break above the 50. So a lot of overhead resistance. Again, Goldman's going to take out 160. If we can't take out 160 on a closing basis, you really, I don't think shorting Goldman is actually a good idea as well. We need to really break the 200-day moving average, and then you have some big downside movement. Big move to the downside, excuse me. But again, I like to see Goldman break above 160. It has a lot of work to do. Very, very weak. I don't see any buyers here. I'm watching Goldman all day. So keep an eye on Goldman. If we can catch a bid, that's another story. Now here's the XLF, holding this uptrend line from November 2012 lows. Again, going to need to continue to hold this. Thursday's low. We lose this on a closing basis, you're going to test this area, and then, of course, you're going to test that 200-day moving average. So, again, banks are not participating, still has yet to participate in any type of movement to the upside. Very small when we do get a bounce. I'd like to see a leadership role in the banks that would help me, at least help the bullish case. Apple, what can I say? Apple really in no man's land. I like to see it right down in the 465 area or the 200-day moving average and see where we go from Apple. I would not be looking to buy Apple here. We had some product launches. Nothing really happened other than a couple of big moves here. Now we're coming into the holidays, but if we can get one flush to the downside, then I think you can buy Apple for a holiday rally with a tight stop. Okay. There's a lot of competition now with Apple. A lot of great phones being built. So just keep an eye on this. Remember, Apple, yeah, sure, was a golden child, but you got to be careful. Things do change, and they change relatively quickly. And lastly is the Qs. As you can see, weekly Qs back up in the in an uptrend channel, looking okay. Not really in the longer-term picture, looking fine. But again, we don't want to be losing this this downtrend, this uptrend channel, a lower trend line. And again, lastly, daily charted Qs above the 20, above the 50, and 200. So the daily charted Qs, so technology's leading, doing quite well. Transportation doing quite well, exactly what you want to see. And of course, the Russell 2000, a good gauge of risk, doing quite well. We do not want the three leaders starting to break down. If that happens, and then the banks start to break down as well, the only puzzle here is to have this, have the banks start to lead as well. And then you have something here where we can actually possibly have a good movement to the upside. But again, guys, a lot of headline risk out there. Be very careful. I wouldn't be putting too much risk on. Let this resolution come with Washington and a debt ceiling. And then let's see where we go from there. Let the markets tell us what to do. In the meantime, take quality day trades, take quality setups. If you don't see them, step aside. Cash is a position. Remember that. You're never going to get burnt being in cash if there's a lot of confusion out there. Take a few setups. And again, if you are looking to buy and do some swing trading, nibble into some good quality stocks that are holding up well in this market. Because when the market does turn, these stocks will pay you twofold. Have a great day. We'll speak to you tomorrow. Take care.